Okay. Hey, as I said, morning. My name is Gary Decker. I'm the external relations partner here at DC Green Bank, and I want to welcome you to the joint DC Green Bank Montgomery County Green Bank CLEER event. You'll see on the screen that we also have a special guest that I'll announce soon. I'm one of your moderators today, along with Latoya Thomas, principal and founder of Brick and Story. So you'll see Latoya pop up in a little bit as we get to the Q&A portion of the session. To let you all know, you'll see that this session is being recorded so that others who weren't able to join, whether for the snow or other reasons, can also partake in this discussion. So I want to let you know that. And over the course of the discussion, you'll see that we'll use some slides, and those will also be available if you're interested in those. To let you know, as we get into the discussion, there will be time for questions and answers, and you'll see at the bottom of your screen on Zoom, there's a Q&A button. Once we get to that section, or really at any time, you can put your questions in there, and Latoya will be curating our questions for the day to make sure that we can move through the queue expeditiously and get your questions out on the air for us to talk about. Beyond that, I want to make sure that we understand what we're doing here. We're going to do a little overview of the CLEER product that both DC Green Bank and Montgomery County Green Bank offer. After we get a sense of this product, we're going to hear from our special guest on what it's like to use this product and to partner with one of our green banks. Then we'll get into the Q&A session, and hopefully we have an extended period of time for that. Beyond that, then we'll give you some additional details on how you can get involved with the green banks and using this product. And we'll close out the session after that. So we really appreciate you being here. We're looking forward to both you learning more about CLEER product, both of the green banks, but also hearing from you about what challenges you have and how this may be able to support you. And so with that, I think what we're going to do is we're going to jump right in, and we're going to start with Tom Deo, CEO of Montgomery County Green Bank, and he's going to walk us through a little bit of history about Montgomery County Green Bank and the CLEER product. Tom, over to you.
Great. Thank you, Gary. So hopefully let me just get this to slideshow mode. Okay, well, thank you, Gary. And I'm looking forward to this presentation. It's been a great opportunity for us to collaborate with the DC Green Bank and to bring the CLEER product that we launched in Montgomery County a couple of years ago to the region here, and in collaboration with DC Green Bank. And also grateful to all the contractors that are on the line here that we've had the opportunity to work with over the number of years that we've had it, and to get some traction on it. And I wanted to sort of bring everybody up to speed with that, and then turn it over to Eli Hobson at the DC Green Bank to talk about what the opportunity is in DC. So first off, for those who might not be familiar with us, the Montgomery County Green Bank, we're a mission-oriented organization. We're a nonprofit. We're chartered by the county in 2015, became an operating entity in 2017. Our purpose is really to accelerate investment in energy efficiency, clean energy in the county. And we really focus on bringing a diverse, equitable, inclusive opportunities to both businesses and residents in the county to undertake energy efficiency, renewable energy projects. And a large part of our effort is aligning with the county around its greenhouse gas emissions goals, which we'll go to in a moment. And the way we do it is we're really a partner investor. We work with other banks and financial institutions to create product that brings more capital to the market, because we have very limited capital in our area in order to do so. So bringing other capital to the market is what we're about. But just to catch everybody up, we originally had the initial driver. The county had identified getting to 0% greenhouse gas emissions by 2035. Big hurdle. They've just this last month, if anybody hadn't caught up with it, please do. You can go out to the county's website and look for their climate action plan under the Department of Environmental Protection. It was just released in December of 2020. Quite a lot of activities in there built around buildings and transportation and sequestration, but it's a great framework for understanding how the county is going to proceed or wants to proceed in order to reach that goal, and give you some ideas of where your work can mesh up with where the county's efforts are. They're adopting the 2018 International Green Construction Code as another opportunity to sort of bring new construction in line with a higher energy efficiency, renewable energy. And they're working on building energy performance standards. I know this is something Eli can talk about in DC, but they're being considered and maybe become part of what the DC code is, and something you all should be keeping yourself aware of, because as those come to be, that's going to put a lot of milestones out there for current buildings to reach higher energy efficiency. And then the last thing we've been focused on most recently is indoor air quality. Given COVID and the issues everybody's having in terms of operating their businesses, and how do they improve those environments in order to bring their customers and their clients back into them. So that's become another effort of opportunity to sort of try to help our products fill. But just to, what is CLEER? It's commercial loan for energy efficiency renewables. Its uses are commercial and industrial, and that includes any multifamily property out there, any condominium property that falls inside the commercial for the associations, not for the unit owners who have their own utility bills, but for the associations themselves. And nonprofits are a big target of our support with the CLEER product. Its scope is to cover energy efficiency. It covers boilers and furnaces, electric and gas, as long as there's improved energy efficiency there. Solar PV, it can do it within the confines of doing with energy efficiency or standalone. Covers energy storage, combined heat and power, building tune-up, knowing that may not necessarily drive to a 15% energy savings at the beginning, but it can be a start place and help build a plan for properties to sort of develop for longer term energy efficiency. We do target 15% energy efficiency, and if you have costs that exceed the scope that's there, we can accommodate up to 30% more of costs inside the loan. Our current lenders, we don't do this directly, we do it in participation with lenders. Sandy Spring Bank and Latino Economic Development Center in Montgomery County is still part of our lender crew. And what are the terms? It's a minimum $15,000. For those of you who might have been on before, we used to have a cap of $250,000 that no longer exists. So it's just a minimum of $15,000. It can go out to 12 years. It can go up to 100% financing. That's dependent on the credit review, that there's certain enough cash flow in order to cover that. It's not secured by the property. They look at securing only on the fixtures, so there's no new debt on the property. And depending on the credit and so forth, the guarantees may need to be a part of it. But just to give you so we have had traction. I want everybody to be aware. We've been getting some work on this, and we've had a number of transactions, and quite a few are in the pipeline. This is indicative of some of the things we've done. We did an office building. It was an HVAC on the roof, large system. It was a $200,000 plus investment. The interest rate was about 6% over a 12-year period. It had a one step up in year 7. But that was one of the first investments we did. And then we've been highly successful in the residential condominium area. We had one property that was a large high-rise. It did quite a few things: boiler changer, EV charger. It was about an $830,000 loan, about a 6% interest over a 10-year period. And then we had a smaller property, a garden style. It was a chiller and piping. It was about a $500,000 loan, and that was about 5% over a 7-year period. And we're working on another large garden style property that's going to be on the chiller at about a $600,000. So you can see, we're not operating in the low end of our scale. We're operating very much at the higher end of our scale. And we do have a retail deal in process that's looking at equipment and HVAC, $150,000 plus. So we're very much, the product is now starting to really get itself into the market. How can it benefit businesses? Cash strapped, we find, that they just don't have the proceeds right now on hand to move forward. This is a way to invest. Operating costs, particularly these times, at this day and age, they're trying to reduce their operating costs, get some long-term benefits out of that in order to sort of build up the reserves or others by reduced operating costs. And they get more improvement outcomes. If they're just looking at the cash they do have on hand or the initial energy benefits, it might not meet the ROI that they're thinking they're going to get to, or that they need to get to with that cash. And if they lengthen it out, they can actually increase the number of outcomes they can achieve on a given project. And just so we have other green bank offerings out there that go beyond CLEER. We just launched a small business energy savings program, which really focuses on the smaller scale, under 150,000, with a lower rate and flexible terms in this day and age. We just launched a commercial solar power purchase agreement to get the 25 kW arrays larger so we can get to smaller size arrays. We do community solar investments. We got a homeowner product, and just to remind everybody, there is a commercial PACE program in the county. And so I wanted you to know that I'm here, Tom Deo, but also Steve Morrell, who's also our Chief Investment Officer, who came on board about a year ago, and he's been the person that's most involved with working with all the commercial solar contractors, and he'll have a chance to talk a little bit later. But at this point, I'm going to turn it back over to Gary. Thank you.
Thank you, Tom. Really appreciate that. And as I said before, we're going to have a good amount of time for questions. So now we're going to turn it over to Eli Hobson, who is CEO of DC Green Bank, to talk about the CLEER product in DC, the origin of DC Green Bank, and if there are any differences between how the products are offered. Eli? Eli, you're muted.
There we go. Sorry about that. Broke my screen share when I was doing that. There we go. Great. So DC Green Bank was started, legislation was passed in 2018. The focus was really on helping DC meet its greenhouse gas goals and doing so in a manner that supports inclusive prosperity and helps build the clean economy in DC. DC has an aggressive goal, 50% clean energy, 50% reduction in greenhouse gases by 2032 through primarily increased renewable energy use, but also energy savings, which Tom mentioned a little bit and we'll talk about more later. And the goal of Green Bank, similar to Montgomery County, we are not going to be the ultimate sole source of capital for the clean energy transition, but we want to be helpful in filling gaps in information and providing new pathways to develop financial products, supporting technologies and offerings in communities that are not as able to access traditional capital, but helping to demonstrate that those are successful pathways and eventually, ultimately shift those off and get our commercial bank partners to work in those areas on their own. Our vision is a thriving clean economy for all DC, and our mission is to provide access to capital, growing the clean economy to develop a more equitable, resilient, and sustainable DC. Our sector focus areas are solar power, stormwater resilience, green buildings, and clean transport. Our CLEER product, which we're here to talk about today, is primarily focused on solar power and green buildings, building efficiency. But for general information, we also are working on the Stormwater Retention Credit Program, which was developed by Department of Energy and Environment to help address local inundation and flooding and to encourage a broader citywide approach to stormwater retention. We're also looking at clean transport, vehicle electrification in particular. So that may have some application for certain building projects where it makes sense to incorporate vehicle charging, for example. And Tom covered the CLEER loan. Our terms are very similar. We have adopted the original version, which has a soft cap at $250,000, but we'll consider additional amounts on a case-by-case basis. Otherwise, there's not really any significant difference. We go down to $10,000, but the loan product that's offered is very similar, and that's really by design. We wanted to make sure that for you, the contractor, and for our lender partners, that we're building a regional market that has a similar offering, so that you don't have to ask yourself, am I on a job in DC or am I in Montgomery County? You know that this financing is available across the region. Why were we particularly interested in CLEER for the DC Green Bank? In part, this is a program that's up and running, and we wanted to act quickly, particularly with the economic situation, with the pandemic, and with the challenges of getting financing these days, more so than even we expected when the Green Bank was started. And so the ability to work closely with our partners at Montgomery County to take a product that's already developed and to be able to launch it quickly was a great benefit. The regional benefit, so that it's a consistent offering for all of you, is another clear benefit. And the other piece that I did want to mention, and Tom previewed this, DC has passed its Building Energy Performance Standards, or BEPS. And so those standards are in place. Right now, they're affecting our largest buildings at 50,000 square feet and above, and federal or government-owned buildings, DC government-owned buildings, 10,000 square feet and above. So there's a huge market out there of buildings that are over the next 6 years going to have to make improvements in order to comply with the standards. Those will ratchet down as the cycles in DC continue to move forward. So eventually all buildings over 10,000 square feet will be covered over the next couple of cycles. But given that that stick that's in place, the regulatory requirement that these buildings make upgrades, we wanted to make sure that one of our early offerings was available to help buildings meet those standards. So where, which we think will be most cases, meeting the standards is cost effective over the long term, CLEER will help make that financing possible so that the buildings can be, can see cash savings on day one. There's other programs, as Tom mentioned, there's PACE in DC, as well as Montgomery County. We have an open RFP, which is a flexible product if there's any sort of unique situations or purpose-built pieces that you need. But for the building sector, CLEER is a strong product. We're also partnering with Sandy Spring. So Sandy Spring's the lender who's had experience placing these projects in Montgomery County. We've just launched CLEER in DC. We have not yet funded any projects in DC, but looking forward to our first product. With the BEPS pieces, that's buildings in DC are 75% of our climate emissions. So BEPS is a key piece of meeting the standards. And we think we want to be helpful in helping all of you do the work required to meet those standards. With that, there's several of us working on the CLEER program in DC, Gary and myself, but you can reach out to our info line and we'll make sure the message goes to the right place. That's info@dcgreenbank.org. And our main line is 202-301-8300. Thanks, Gary.
Thanks, Eli. And I was about to ask you if anyone wanted to use the Q&A function at the bottom for any quick clarifying questions. And it looks like Seth K decided to do that. He asked, and Eli, I'm going to kick this to you. If the $250,000 cap still remains, can a building apply for multiple systems? So would that be more than one deal, or how would the cap work if someone applied for multiple systems?
That's a great question. I think, so the cap is, I call it a soft cap. It's it just means that we have to coordinate with Sandy Spring Bank to work on projects that are larger than 250,000. Given that our existing lender is Sandy Spring's experience with Montgomery County going far above the $250,000 cap, I wouldn't see that as an impediment. So we could be flexible, whether that's multiple projects that are each doing an individual financing, or whether it's simpler to do a single portfolio-based financing.
Thank you, Eli. And so as everyone knows, right after our special guest here, we're going to get into a larger Q&A session. So start gearing up your questions. And you heard Eli and Tom's call to action here, and especially for DC Green Bank. We'd love to have people come in the door as the first CLEER partner. So that is a clear call to action for everyone. And so now to get to our special guest, we have Mike Kane from Era Building Solutions. He's the managing director there, and he's going to talk about his experience with the CLEER product and sort of speak the language of all of you on the call, so you can really feel comfortable with CLEER. Mike?
Yeah, good morning. How are you all today? So just wanted to, just per your direction, come out and kind of speak a little bit to the CLEER product, just from the contractor perspective. Kind of talk about a little bit of our experience working with it, how simple it's been, how good it's been to work with, and also how it's sort of helped us to deliver more value to our existing building clients, which I know is important to a lot of the folks that are on the call. So went ahead, I think I'm sharing a screen here. If I can get a quick head nod from a panelist that we're all good there. All right, thank you. So obviously when we go to think about sort of how we're looking at these from a contractor perspective, it really all starts with the client. I'm sure that every other contractor on the line is thinking the same way. There are always any number of challenges, and I know there are a number of solar providers that I see on the line. There are also some mechanical and performance contractors. So we'll try to speak to this from your perspective, but also I think it's important to not lose focus on the context of why we're all doing this, which is the client goals and objectives involved. So with that, we hear pretty much three main concerns from existing building owners. And we kind of have labeled this lovingly the client concern trifecta. So this all starts with, as a building gets older, sort of where it creates challenges for folks. So number one is aging infrastructure. So as the building gets older and older, obviously becomes less operationally efficient, less reliable, and that creates challenges sort of in and of itself. As those building systems continue to degrade, operating expenses go up. Obviously, capital expenses do as well, but that repair, operations, and maintenance category really starts to become a challenge. And it especially becomes a challenge for some of those groups that Tom Deo was kind enough to sort of lay out, especially the not-for-profits and the cooperative ownership communities that are working with limited capital. They're not the same as all the other groups, the ones for which the other contractors online who are familiar with PACE might have used PACE to target. And they really have their own sets of challenges. So very often what we see is rather than these three being individual issues, they all sort of come together and culminate in sort of a perfect storm. And you can look at this two ways. You could either look at this as a big challenge that's a huge headache, or you could look at it as a huge opportunity to really deliver a lot of great value to your clients and really help them out of the binds that these three things create. So I know, especially with the solar folks on the line, obviously you might not be addressing aging infrastructure per se, but you're definitely addressing the bottom two in that little trifecta there. So we'll go ahead and a quick show of hands. If you look at your screen, there should be a little raise hand note down there somewhere if you take a second to check that out. And of course, if you want to use good old fashioned hand gestures, we can't see you anyway, so you're welcome to use whatever hand gesture you like. You can rock on or whatever you'd like to do here. So with that, quick show of hands, as you think about your properties and your projects that you work with, I'm sure this has never happened to anyone, but who here has worked really hard to develop what they consider to be just the perfect solution to a client's problems, only to find that there wasn't enough available budget? Seth, I see you were the first to raise your hand. Thank you for that. So we'll let the answers sort of trickle in here. But obviously, I mean, it kind of goes without saying that this is really what we're looking to address. So I'm sitting here watching the numbers and they're just sort of going up and up. So available budget is always a challenge. And sometimes, unfortunately, this can really get in the way because you can develop a project that's absolutely perfect in your mind. And maybe it's absolutely perfect for the client. But if there's no budget for it and there's no way to finance it and pay for it, there's no way to get it done and bring it to fruition. So obviously, that's a clear challenge that this helps to create. So you can go ahead and put your hands down. We've got two more of these that we'll go through a little more quickly now that everyone found the little hand button. So with that, anybody here lost a project because their client just wasn't confident in the returns that they were calculating? This is a tougher one to admit, but it's definitely one that happens from time to time. And to give you a little bit of an easier out here, sometimes it can also happen when a client is in such a tight financial scenario that they just, even if they do trust you vehemently, they just can't trust in the calculations because they'd be cutting it far too close for their end mission. So I'm seeing more hands come up. A lot of times what we found is that the green banks and the banking partners like Revere Sandy Spring that are so good, they really help to lend to your credibility when you're speaking to clients. And it gives that additional backing because they're not just bringing funds, they're also bringing a sense that you really know what you're doing here when you're talking to your client and your calculations make sense. So last but not least, anybody ever sort of not had a project move forward due to other operational priorities? Main reason for this one, I'd be willing to argue that's really the same as the first two. It's just a different way of saying it. If there's a different priority, either you didn't identify the right project to start with, which I'm sure isn't the case for anyone on the line, or there was a budgetary restraint or some other factor that laid in there. So you can go ahead and put your hands down. Just wanted to kind of get the feel. Looks like a lot of people have seen those challenges. So that means I'm sure a lot of people are going to reach out to Eli and Gary right after this call and beg to start rolling out green bank loans to their clients in DC. So with that, let's talk a couple quick case studies. Tom was kind enough to lay out, as was Eli, the sort of vast range of projects that can potentially be funded here. So we'll start with comprehensive condo, which we'll just nickname. This is a real project. This is one of the ones that was on Tom's project list that he was talking about there. So this condo, you can tell me it probably sounds familiar to everybody here. It's built in the 1960s. It had heavily escalating operation and maintenance costs. They were spending a fortune on repair of their existing systems. Their boilers, their elevators were having severe issues to the point of nearly being inoperable. And they were really just struggling from an operational perspective. On top of that, they had very limited capital to be able to actually perform upgrades to the building. So through the Green Bank, what we're able to do is layer Green Bank with a number of other folks that we'll get into in a second to really identify a more comprehensive project that they could take on that would also be heavily funded and supported by the local municipalities and local programs so that they could actually afford it. So even though they couldn't afford a $500,000 boiler replacement like for like, where they would have been stuck in a similar efficiency scenario, what the Green Bank actually enabled was a $1.5 million comprehensive upgrade that brought huge amounts of energy efficiency to the table and also helped them with comfort and other issues that they were really facing. So obviously that wasn't just Green Bank. Tom mentioned the Green Bank side of that was about an $850,000 loan. There were also other factors there. The Green Bank was especially creative and I'll say extremely easy to work with in helping to find bridge loan opportunities and other things to help the property get things started. Beyond Green Bank, you also had funding from the local Pepco incentive programs being layered on top of Washington Gas incentives. And even the Maryland Energy Administration came to the table with some grant money that really helped to fund this project in a much more comprehensive way than what otherwise would have been possible. So when I say comprehensive, I do mean it. These folks had newer chillers and newer cooling towers for any mechanical folks on the line. But not only were we able to replace those failing boilers, help to some extent with those failing elevators, but also help replace their domestic hot water systems, upgrade their central automation system, and make some minor improvements to lighting, add in some new EV chargers to the front of the building, even add on resident controls. And last but not least, what we were really able to do here that was kind of unique is add in the combined heat and power plant. So not only was this property able to take on sort of a proactive replacement, but they were also able to take a step back and make their own power on site, recover the heat from the power, and use that for some of the additional heating that they needed. And that really helped to boost not only their financial returns, but also their energy returns and the grants and incentives. That alone brought an extra $170,000 or so of incentives and grants to the table, which really assisted them in making this more comprehensive upgrade. So obviously that's one end of things. That's sort of the high end. But there is a smaller side where you can really help folks on Main Street too. Tom mentioned the pandemic assistance, and this one is a theater company that was working on trying to get to reopening. Interesting thing about this, we're actually not sure if they're going to use the Green Bank loan yet. And that's something that I will sort of emphasize to the contractors on the line. It really pays off to bring the Green Banks into the conversation early. So this is the perfect example. As us as a contractor, we've identified something that will help and be able to assist them in the reopening process to improve air quality. We brought the Green Bank to the table. The Green Bank was a huge assistance in being able to show that the project would have financial returns. And then the client also checked with their own existing banking partners, and they relayed all that, compared that information, and they haven't yet made a call on how they're going to finance it. But because the Green Bank was able to bring their end of financing and sort of lend that credibility to the project, they're definitely going to move forward and improve themselves from an energy efficiency standpoint and from an air quality standpoint. I do suspect this will become a Green Bank loan, so it's fair to show here. But regardless, it's really helped that project to happen. So from your perspective as a contractor, don't necessarily worry as much about if you're 100% positive that something will be a fit for the green bank at the end of the project. More be concerned about whether it might make sense to bring them in so that you can at least have those conversations and offer that as a point of value for your clients. So this particular project is significantly smaller than the other one. This is about a $35,000 sort of targeted upgrade. This was really meant to help them get back to reopening status with the pandemic. They didn't have enough outside air for them to feel comfortable bringing students back into the theater company. So what they did was they upgraded their controls so they can control temperature and humidity more effectively. They upgraded their filtration so that they can be pulling more of the small particles out of the air and helping with air quality on that end. They upgraded all of their rooftop units so that they can bring in more outside air into the building to make it safer and healthier. And that will pay dividends for many years, not just through the pandemic period. And they'll be replacing 2 of their HVAC units up on the roof that were inoperable. And this was huge for them because these were all operational costs they needed to take on anyway. But now they can spread the cost out over time, which is really important for them from a cash flow perspective during this time that their revenue has fallen so much. So those are obviously the 2 sort of high end and low end ranges. Just about anything you can think of in between tends to fit here. So when we think as contractors, we're always thinking of the tools in our tool belt to be able to help our clients. So I think everyone here is used to working with grants and incentives. Those are obviously key and critical and sort of a point of parity amongst contractors. And if there are any owners on the line, you always want to make sure you're taking that into account during your decision-making process, because they can definitely help you to get more efficient infrastructure in place. If you add to that green bank, which by the way dovetails very well with PACE, in filling in some of those gaps that PACE might not be able to fill, like condos and co-ops, for example, that can really create a much greater value proposition for your client that's easier for them to take on as they go to implement projects. And then add in the additional layer of tax benefits and other benefits that you can bring to the table. And you've really created sort of the ultimate value proposition that you can deliver for your clients at the end of the day. And this is really where, by bringing all those things in together holistically and taking advantage of the resources like the Green Bank, you're able to get your clients to where they're looking to be at the end of the day, which is, again, sort of what we're all about. So if anyone has any questions, obviously feel free to shoot questions in the chat box there. I will go ahead and stop sharing my screen, but feel free to reach out anytime if you run into anything. I know we're all friends and competitors at the same time, but we're always happy to help and get people going through the Green Bank, because the more the merrier. We're all looking for a more efficient DC in Montgomery County. So thank you.
Thank you, Mike. Really appreciate that input. And I can see the questions pouring in at the bottom. So that's really great. That is a reminder to use the Q&A function at the bottom. I'm going to hand it over to my colleague, Latoya, who's going to run us through the Q&A session here. If you want to ask your question through the chat box and Latoya reads it out loud, that's fine. If you want to ask it live to our panelists, you can use the hand raise function to do that, and we can let you jump in the queue that way. So Latoya, go ahead.
Awesome. And for folks, I know we have a few folks who are calling in. If you are on the phone and you have a question, dial *9 to raise your hand using a phone feature. So it's *9 if you're calling in by phone and want to raise your hand to ask the question. Let's go to the Q&A box first. I'm going to go a little out of order here. Mike, to your presentation, there's a question from Lisa Walsh. Did the $35,000 loan stay around 5 to 6% APR?
Sorry, I have to take myself off mute there. I believe it did. Tom, do you remember what the pre-qualifications were on that? That hasn't, just to be clear, that hasn't been run entirely to ground. That was a pre-qualification, which I will say, by the way, to all the contractors on the line, and Lisa, I know we've run into each other before. That's hugely helpful. The green banks will issue pre-qualification letters just saying that a project is generally qualified, and lay some example terms and conditions out there for the client to consider. And that's what happened here. Tom, looks like you're off mute. I think it would fall in that area.
Yep. I'm going to push this to Steve. Steve had this one and he was working, and so I'm going to let him go to there. Steve.
Yeah, no, the short answer is yes. And to Mike's point, you know, what's helpful for our perspective is to get some information at the outset that you're presenting a proposal to the customer, and we can work on some of that pre-qualification information, including kind of what terms we would look at. And I know we're going to get to the questions above, which also get to it, but, you know, we'll take a look at underwriting from a different perspective based on the asset type if we're doing a condo building versus retail or an office building, they do end up looking a little differently. So looking at some of that pre-qualification information is helpful from our perspective. And that's where we kind of placed that smaller loan, and ultimately we'll see where we end up closing out. But we certainly can provide that information at the outset.
And to the point Lisa was asking about the terms on that was being done also through another product we have, our small business energy savings, which gives us more flexibility of being between a 3 and a 5% rate, depending on the type of product. But it's a companion to the CLEER product, but
All right, keeping on the theme of financing, let me jump back to the top of our Q&A box. From Earl Peak, we got 2 sets of questions. Please outline the financing particulars when a bank or bondholder is involved. What's the lien position? Does the bank do companion loans and not take the Green Bank assets as collateral? Also, will DC Green Bank take cost savings as a source of repayment? And then a related question, are there any underwriting guidelines or loan parameters for deeper examination? I'll let anyone start there.
If you all don't mind, I'll jump in first, actually. So, and I can actually take this along with Andrew's question a little out of order here in terms of comparing CLEER to PACE, because I think that's what's relevant here is, when you're thinking about these larger projects that have a longer payback for any commercial and industrial property, I think you should be thinking about CPACE and you should be thinking about CLEER. And there's going to be one that's going to be the right opportunity for that customer, but it really depends mostly on where they want to fall out on security and capability to get a lien placed if they're doing CPACE. So, clearly if you're doing CPACE, the capital provider for that is going to have to get approval from a mortgage bank, the senior lender in the transaction. And sometimes that's not possible at all. If you're working with a condo building type, you're not going to be able to get that to happen. And so clearly in the alternative, you would want to think about CLEER because you don't have to worry about that lien placement. To the first question, typically security would be a UCC1 placed on the equipment. We would take a look as well as at the cash position of the company or the association, if it is a condo association. In the past, what we've done for condo associations is taken a pledge on their reserves. So there's some alternative ways that we can do the security on that, but it's not a lien that's being placed on the property as you would find in CPACE. So, clearly there's an advantage to one under CPACE and there's an advantage to other if you're not capable of getting that under CLEER. In terms of the underwriting guidelines, we kind of took a look at some of them. Already you can go out to 12 years, clearly you want to figure out what's right for the payback and to try, well, we always to make that financing make sense for the customer. We'll look at 80 to 100% leverage, depending on the type of project and the building type, interest rates between 4 and 6%. So kind of the terms that Eli and Tom already described, but we'll look at differently for each building type. So again, I think it just depends on what your customer is going to be comfortable with, but you should be looking at both CPACE and CLEER, and one is going to make more sense for them than the other.
All right, thanks, Steve. And then jumping down, also from Earl Peak for Eli, the name says DC Green Bank, but it seems to be region-wide. What's the territory that DC Green Bank can cover?
So DC Green Bank, we are focused on DC. We are allowed to lend outside of DC as long as we're not the sole long-term credit provider. But as we're getting started in our early stages, we're really focused on DC. We're excited to be here with Tom and Steve from Montgomery County. And I don't know if you all want to answer that question. I don't know if you all have external authority beyond Montgomery County. But between the two of us, we cover a decent chunk of the region. And certainly looking to work with others. Virginia has a PACE program now, and there's other entities around the city. So we want to make sure there's regional opportunities for clean energy finance, and happy to work with folks across border to make sure those are standardized options to the extent we can.
Yeah, our limit is Montgomery County, but in this collaboration with DC, we're trying to take, our experience and grow larger. We're we'll see that in reverse too, as DC Green Bank brings things up that our interest is trying to make it easy for you all to sort of operate whichever market you're operating in. Just on the home ownership side, we're doing similarly with working with the Maryland Clean Energy Center to try to create a product that'll take our localized Montgomery County product and make it a statewide. So we're constantly in a position to try to think about how we take what we're learning and work with our collaborating partners to make it bigger than the geographies we're having to operate in.
All right. If there are no other questions right now, I want to go ahead and turn this back over to Gary for our next section. And if you do have any other questions, please feel free to drop them in the Q&A box or raise your hand and we'll get back to you in a few minutes. Gary?
Thanks, Latoya. As she said, definitely make sure if you have questions, please keep them coming in at the bottom there. Do any of our panelists have any clarifying points that they want to make based on any of the questions that we have coming in?
It's the one quick point I would make is, we talked about CLEER, we've talked about PACE, and in both of those cases, there's the bank, not the DC Green Bank or the Montgomery County Green Bank, who's providing the capital for that. We're really playing a facilitating role. We give the credit enhancement in CLEER, where we provide a loan loss reserve, and for PACE, we're helping be the administrator. So it's not as if you've got multiple lenders that you have to deal with. We're really here to help smooth the process and be a credit enhancement so that those other capital lenders, traditional banks, can be more comfortable and certain in their investment. And Tom, I don't know if you wanted to add anything to that, but I wanted to make sure that was clear given one of the earlier questions.
Steve, I saw you on mute. I don't know if you were going to answer. So, but I think our point of reference is leverage as well, right? That we have a limited source of capital, and our interest is to try to partner with other financial institutions in order to bring their capital into the market and leverage their underwriting and origination skills. And so the CLEER was our first opportunity there. We've also done this small business energy savings program with City First Enterprises in order to we put a little bit more of our own capital into that in order to make it a little bit more flexible. And it was intentional to respond to the COVID needs and small business needs of reopening and dealing with the opportunities to sort of do operating efficiencies and or health measures in the properties. And so we've got a small amount of capital in there, but it's trying to be supportive of those businesses trying to reopen. And the first project we did with it was a condominium, but it operated in a way that over a 4-year period that they took out the loan, they had a positive net cash flow, undertaking a large lighting project that they had. And from then on, they have the loan is repaid and they have that operating benefit for the life of the measure. So we're trying to use that as a way to sort of bridge any projects that need to happen, where even like in Montgomery County, 0% financing may not provide over that 2-year horizon a positive cash flow. You take the lower interest loan that we're able to offer and take it out 3 or 4 years. They have positive cash flow from the beginning, and they don't have that stumbling block of trying to come out of pocket to service something that's just even though 0% sounds great when you're talking about a $40,000 loan, difference between 0 and 3.5% really is not that much. But what you gain is a longer term and ability to service a loan without coming out of pocket to service it, right? So there are strengths to, the 0% is nice, it comes off of the on bill, but if that's not positive cash flow, it's still a decision for folks to have to make. So anyway, Steve, I don't know if we're going to add to that.
No, that's great. I actually just wanted to reiterate one point that Mike made in his presentation. And, thinking of a loan that may end up closing with us, may not, is still very productive from our standpoint. That at the end of the day, we're trying to get these clean energy benefits to meet the goals of the county, and particularly as BEPS comes online. So as an educational resource, or at least a resource that we can add some of that financial knowledge for the customer to help you get the job, is a win for us as well. So, again, encourage any of these kind of pre-qualification outreach that you can do with us, and provide some level of comfort to the customer, even if they don't end up using CLEER financing or CPACE financing, and use whatever, their line of credit with their own bank or anything. At least they're educated about the financial strategies to achieve those goals. So we're pleased in that case.
Thank you, Stephen. That's the point I also meant to make. We actually just had a project, a residential loan portfolio that we spent quite a bit of time working on, and it ended up going directly to its commercial bank and was able to finance without our support, which is a win in our book. So we were very happy to see that move forward in the traditional banking sector. So we want to be helpful, even if that ends up meaning we're not the right solution.
And if I may, I'll just quickly add from the contractor perspective, I know, and I'm sure not every single contractor on the line wants to be an expert in finance, and that's okay, right? And that's one of the things here that the green banks really act as a fantastic central hub for, is if you're not sure if PACE is the right fit, or Green Bank, or Green Bank small business product, or even a PPA for the solar side, or whatever it might be, they're really a good financial resource for you to tap into, because at the end of the day, everyone on this call is all about trying to create good energy saving projects that bring value to your clients. So bringing them in early, bringing them in often will almost always be helpful. I'm sure Steve's more than happy to tell you if you're calling him too much, but I haven't heard that yet, and I don't think I will in the future. So they're really good teams to work with, and you don't have to be the expert in everything. You can lean on these folks as your experts in finance. So, and that's really probably one of the handiest aspects that I might not have touched on enough.
Thanks, Mike. Really appreciate that, and certainly that's the truth. So if there are other questions, please feel free to have them come in at the bottom here. Next, I want to kick it to both of our banks here to talk a little bit more about how contractors can get involved directly. You've heard a little bit from Steve Morrell at Montgomery County Green Bank. I didn't give him a full intro, but I know he's their Chief Investment Officer. And so he's going to talk a little bit about how you can get involved with Montgomery County Green Bank with the CLEER product, and then we'll go to you.
Great, thanks, Gary. Yeah, I can be fairly quick because I think most of the people on this call are familiar with our process. We have a registration that we've put together of being a CLEER contractor, and really we just want to see some expertise in terms of the incentive programs and the service provider at the utility to be able to be part of our CLEER program. But clearly that's not a challenging hurdle to make. If you have a project, you can do that on an ad hoc basis. You don't have to do it ahead of time, but it also should be a resource to you that if you can get registered, we can put you up on our website and have customers directly contact you about potential projects. And then from there, as we mentioned earlier, just reach out whenever you have these projects that we can take a look at some of this pre-clearance information on the customer that you're working with, what makes sense in terms of financial strategy. You can really bake those terms into a proposal that you're putting out to the customer, and then hopefully they can move forward from there. We can interface directly with your customers to help educate them. We can provide all information through you. And then, certainly if they come to us and they say, well, we need a contractor, we can make some referrals from that perspective to a couple different people as well. So a couple different ways to work with us, but first step is definitely to become registered with us, and then we can move forward on individual projects from there.
And Steve, is that on your website somewhere where people can do that?
Yeah, no, absolutely. If you look through our website, you can see the area that people are getting registered. It's actually just send us an email, info@mcgreenbank.org. You'll see our email box on the website, so you can take a look there, but just feel free to email us at any point to go through the registration.
Thanks, Steve. Eli?
Thanks, Gary. And since we modeled our CLEER program on Montgomery counties, for those of you who are familiar, the process is very similar. The substance of our documents is based on the same formats. We did have to make some tweaks for DC. So in addition to the PEPCO CNI program, we've also included participation with DCSEU, with DC PACE, and as well with DOEE and others. So we want to be flexible in making this easy for you all to get signed up. I'll put our CLEER financing page in the chat and the contractor agreement also in the chat so that you can take a quick look there. If you have any questions, feel free to reach out to us. Generally, this is our first formal product, but we envision using the CLEER pre-qualification as a tool as we launch our other products. We have a pre-development loan program that'll be coming out within the month assuming we get board approval later next couple of weeks, which should be helpful for some of those early stage design costs that can be challenging. And there'll be other programs rolling out as we get more fully launched over the course of the year. So would love to have you all participate. And if you have any questions, please feel free to reach out to me or to Gary or any of the folks on the DC Green Bank team.
Thanks, Eli. And for the group, actually it's directed at Steve and Tom. We have a question from Lisa Walsh here, that the CLEER contractor list on the Montgomery County Green Bank website was previously restricted to non-solar contractors. Is this still the case?
Yeah, no, good question, Lisa. Right now, we have just the CLEER section. The short answer is we're working on it. We have out there, as you know, this commercial solar PPA option. And so we want to make sure to highlight folks like yourself that could utilize that or CLEER with their customers. So we're trying to kind of revamp our website to make that clear that solar contractors can fall under either. So we're working on it, and we'll let you know as soon as we figure out how we're going to revamp our website and the registration process for that.
Thanks, Steve. Any other questions from participants? Please do use the Q&A at the bottom. Any other clarifying points from our panelists on the process to get involved, or things that you're excited about coming up? If there's anything that you want to tease beyond what Eli just did, for products that you might have coming up, or opportunities you're looking to capitalize. Great. Well, we want to thank everybody for participating. We want to thank our panelists, Tom Deo, Steve Morrell, Mike Kane, and Eli Hobson from DC Green Bank, Montgomery County Green Bank, and Era Building Solutions. And we want to thank all of you for joining us today on this snow day in the region. Please do reach out to any or all of us if you have questions or you need more information. There will be opportunities in the future to join additional sessions to learn more about the products in the region and to get involved. And as I said at the outset of the call, this call was recorded, and so we will be able to make that available to folks if you want to watch it again, or you want to pass it to any friends who may want to see it. And we can also make the slides available if you want to go back for reference. So thank you again for your time, and we look forward to working with you soon. Take care, everyone.
Thank you. Thanks all. Bye.